Good evening, it's Adil Fazal here, market analyst at CFTs.com, bringing you a review of the European markets for Monday's trading session, the 2nd of October 2017. Please be sure to visit Trade Signal, signals and market updates from leading providers at www.tradesignal.com. You can download the app at the Google Play and the Apple App Store. Okay, so let's look at the actual markets for or going into Monday in terms of the bearish side effects. First of all, you have the situation in Spain. Chaos, violent clashes as Catalans go to the polls in vote. That could obviously split Spain. So again, uncertainty in Eurozone certainly is going to rise. We may well see a blip or dip in the Euro, which in turn although last week the dip in the Euro certainly helped European equities, this week, from my perspective, it certainly will be risk negative. Okay, so going into this week, we certainly have the German DAX finishing very strong, up almost a percentage point on Friday, very, very impressively. The French CAC up and FTSE up higher as well, again on the back of a weaker Euro. If you actually look at the Euro USD chart, let's quickly bring this up for you. We've certainly bounced that pivot low at 1.1720. Again, it certainly is coming on board at the moment. Let's just quickly look at this chart. As you can see here, we've got a gap down on the back of the news regarding Spain. That's not actually going to be risk positive. Just bear that in mind. Obviously, a weaker Euro helps European equities, which obviously has, on the back of Yellen obviously maintaining a hawkish stance, and also inflation numbers coming in weaker last week with regards to the Eurozone, and also several policymakers all coming in obviously on the side of the dovish stance as well, which in turn obviously has helped European equities shake off the uncertainty regarding the German election, given the fact that Merkel didn't actually win by a wide majority. And again, she has to go into a coalition, which obviously weakens her hand and any potential future, obviously, European negotiations with regards to Brexit as well. Okay, so a lot of uncertainties going forward. So the Euro, the USD itself last week certainly fell on the back of obviously Ms. Yellen, obviously with a hawkish stance, or remaining steadfast to a hawkish stance, and also Mr. Trump obviously talking tax cuts, which in turn sent the Euro USD lower, as you can see here, from 1.20 down to 1.17. So a 300 pip fall on the Euro USD certainly obviously allowed European equities to benefit and gain from that, and obviously shake off the uncertainty regarding the election. Okay, so that was the status quo. Now we are going into Monday's trading we have had Chinese data coming in stronger than expected. So Chinese data over the weekend certainly coming in stronger. The numbers that we're looking at the moment, non-manufacturing PMI stronger than expected, NBS manufacturing PMI and CACs all coming in stronger than expected, although China is off on a holiday. But you are looking for a bullish move on on Aussie USD and Kiwi dollar on the back of that. Okay, in terms of European equities, let's look at the actual picture, given the fact that that's the backdrop. Again, we've shaken off election uncertainty, and the focus certainly has been on a weaker Euro, obviously weaker inflation numbers at that as well. We even close the gaps. You can see here we close this gap here as well, the key gap at 12.770, and we still managed to push higher up to 12.830. You are looking at resistance on the daily chart now at 12.840. If we break that, the next resistance is seen at 12.950. So 12.840, 12.950. Watch out for those two levels on the German DAX if you are trading that on Monday. Weekly chart all-time high, as we already know, is currently 12.950 on the weekly. Just to clarify, 12.950. We break through there, obviously the bulls certainly are in control now. I was expecting a bear flag formation to play out on the back of obviously Euro USD above 1.20. That certainly has reversed on the back of obviously Mr. Trump, and US equities certainly pushing higher as well. Okay, so in terms of the German DAX, just to clarify, the MDAX 50 as well, as you can see here, clear breakout last week, impressive breakout, and that's obviously helping the German DAX as well. Also the tech all share index as well, with regards to the German economy, again certainly performing very, very bullishly, and the election uncertainty certainly has not deterred that whatsoever. Okay, in terms of the French CAC now, let's move on to the French CAC. Again, like I said, weaker inflation numbers certainly helped European equities on Friday, and also US equities pushing higher as well. The IHS formation certainly completed, and what a move from that pivot low from 5,000 up to 5,330. We had a 330 pip point rally on the French CAC, even with labour reforms not going through. So again, Mr. Macron's popularity certainly is dwindling. Okay, yet still the French CAC certainly has managed to register impressive gains. Now we are into resistance here at 5,325. You have resistance at 5,340. So again, this is a zone that I'm more than happy to short on the French CAC. I may well take out another position tonight. I'm looking to potentially short the French CAC. Now we do have resistance here or we had a resistance here at 5,325. The next resistance is 5,340. So I'm more than happy to short that potential zone. We do have an unfilled gap left behind on the 60-minute chart, so I certainly will be looking to target that on the 60-minute time frame. Okay, looking at the 10-minute chart, impressive thrust going into the close. Very impressive thrust. We initially sold off, and then the bulls just literally took over. Okay, so an impressive short squeeze going into that close. Okay, so again, looking for weakness from my perspective on the French CAC. Looking at the Euro stocks, whilst we're looking at European indices, daily chart certainly does signify a resistance here now. Resistance here at 3,600. Okay, next resistance is 3,615, and then eventually looking at gap fill at 3,640. Will we hit that target? I don't know. Okay, but my bias certainly will be bearish based on the European equities. Okay, going into Monday's trading, especially due to the Catalan vote creating uncertainty as well. 60-minute chart, I mean, it's been very impressive. As soon as we broke through that 3,550 zone, we hit 3,570, and then obviously we've hit 3,600 now. So very impressive to say the least. 10-minute chart as well, just literally non-stop. I mean, that short squeeze towards the close on Friday, very impressive on back of obviously weaker inflation and several dovish rhetoric as well. Okay, so looking at the FTSE 100 now. FTSE 100 certainly benefiting given the fact that we did have weaker GDP numbers from weaker growth numbers on Friday, which in turn sent sterling lower. Obviously dashed expectations of a rate hike, which in turn obviously triggered a short squeeze, and obviously with German equities rallying as well, and the Russell 2000 breaking higher, the Dow pushing higher, S&P pushing and breaking higher as well. That certainly sent the FTSE 100 higher too. Although it was a late Friday, I did actually open up a short position around the 73.75 zone, looking to short the FTSE, stop loss just above 7,400, looking for a potential move lower. We are now into key diagonal trend line resistance. Not only that, we're into that fib 75% resistance as well. Looking at the 60-minute chart at the moment, you do have resistance up here at 7,390. There is resistance here at 7,380 as well. Certainly looking for a reversal. 10-minute chart has intraday double top, again 7,380 zone. So it's therefore looking for that top. Again, we have an unfilled gap left behind at 7,325. Previous resistance equals support 7,330. So that's a zone that I'll certainly looking to be target. Now, we do have uncertainty with regards to Ms. May and her liability, Mr. Johnson, with his racist rants. Okay, certainly looking to potentially overthrow her as well. So there's a lot of uncertainty with regards to the Tory party conference this week. I think it is in Manchester. So again, let's see how that unfolds, and obviously the repercussions there as well. Brexit, obviously talks are not going as good as everybody expects. So again, looking for risk aversion on the FTSE 100 on the daily chart, 60-minute chart, and the 10-minute chart, looking to potentially close that gap at 73.20. Okay, so I think that really is a summation really of the European equities. Certainly extremely overbought. Again, that short squeeze on Friday really, from my perspective, was like a potential exhaustive top pattern. And then now I'm looking for a potential reversal back down to gap fill below, specifically on the FTSE, and also looking for weakness in the German DAX as well, given the election uncertainty, even though we have negated that to a large extent, helped by Yellen and Trump's tax cuts. Okay, so again, triggering a short squeeze in Europe due to the weaker Euro USD. Okay, so let's see how the Euro USD fares this week. Again, uncertainty regarding the Catalan vote as well. We do have PMI numbers coming in, European PMI data coming in today, or should we say Monday's trading, UK PMI data as well, manufacturing PMI, so it'll be interesting to see the numbers there. Any signs of weakness there obviously will cause the Euro USD, so it'll cause Euro stock certainly to go into profit-taking mode. We have US data on tap as well, ISM, construction spending, and Mr. Catalan speaking as well. So very active day Monday, and wish you a prosperous week. Goodbye now.